how to trade with line charts. That's exactly what I'm going to share today. Now, many of you may be trading with a simple price chart like you see here now on the UUSD on a weekly time frame. Now, price charts will work very, very well, but today I want to share how you can also use a line chart to trade with. We'll go through some steps on the best way to use line chart. So first, let's go over to that line chart. So when looking at a line chart, the simplest way you can look at the line chart is using market structure. Now, if you're not sure market structure, there is a full playlist on this channel. It goes through all the market structure videos to help teach you those concepts. But simply what we can look at here is we can identify where the market, okay, breaks up, pulls back, breaks up, pulls back, breaks up. So we have a bigger swing here, fails to break out. We continue to go lower. Okay, we can see the swinging pattern. Now we can't really see that color. Let me just change that to a red so you can see the difference. We have a swinging pattern. So we can use the line chart for those swings. It's the best way to do this. We zoom into this current area of price and we can do this on any time frame. So we look at this move down here, okay? We can just look at this last area here. We can mark a level here. What this signals is a break to downside. Okay, so we've broken to the downside. Let's just zoom in even more. Now before that, and if you don't understand the term of liquidity and sweeps in the market, there is going to be a full playlist as well in this channel. We can identify this swing high here was swept here to the right. So you can see we had this push down. Again, this broke structure here. And all of this, we're just using line chart. We're not even using price on the chart. Now, what does the line chart represent? It represents the close price of a current candle. And we'll see that when we go to the chart in a moment. So what we have is we have the breaker structure here to downside. Okay. So we've created this low in the market, pushed back, we swept above this high, and that is where you'll find a sweep entry and you target to break this low and the market pushes down. That is how you'll use the line chart with understanding structure in the market. And again, we can identify when we get down here, we create that pullback and we have another break to the downside. And even here, we have some equal highs created. We may see a sweep here with a potential wick to the upside. Now, on the way down here, we also create areas of potential imbalance. And again, if you're not sure of imbalances, go through the full playlist in the channel, covers all of the imbalance concepts. And again, if we just mark this out, we have a push down, we have a pullback, we have a push lower, we have a sweep. Okay, as long as it doesn't close through, continue up, it's just a sweep. We break lower, pull back, break lower, pull back, and we break lower and we pull back, and obviously we continue down. So we can identify here, look, we have another break here to the downside. I've removed that arrow system. We can see again that we have another break here to the downside and another break here to the downside until eventually we reverse structure here to the upside. Now, all of this information I've just got by looking at a line chart. We're not even looking at the candlesticks. This will help you just to quickly identify a directional bias. So if we just go to the price chart here quickly, and we can now see what happened. We can see that we actually swept through this level, pushed up, pushed back down with this bearish candle, continued down, and then we broke this structure again, pushed through, okay, made this low here, pulled back, made a sweep here, and then we broke structure here again with this bearish candle. Then we continue down, we make this low, we pull back, and we're just pulling back into the area of imbalance here, push down, and we broke through once again. We made this low, we pulled back, lower high, again inside the area of imbalance. We then pushed lower, broke this structure again, and again we create this low, we pull back into where again an area of imbalance. We then pushed lower, made this low, and eventually we broke structure here with a new bullish imbalance. We're just looking at the close prices here. Remember what I said is close prices when we're using a line chart. We're not looking at the wicks, we're just looking at the close prices. If you look at the wicks, there's a different perspective. Sometimes you're going to find different breakouts by using the wicks. Now, the wicks will work just as well as the use of line chart, but the idea of the line chart and trading it is, hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. Just to simplify your trading, to quickly identify, you can always look at the wicks afterwards, but it's going to help you to quickly identify those breaks in the market and where price is going. So you can see by using that line chart, you can quickly identify the directional bias and a reversal of the market. That's a very simple procedure using a line chart. We can do this as well. Let's remove all of this now. We can also do this on another time frame. So let's go down to a 15-minute time frame. And we'll just zoom out. Let's go to current era of price. We're looking at a current era of price on a 15-minute time frame. We could do the exact same thing. We can see we had a break here to the upside. We had another break here to the upside. We're going to ignore these small areas. We're looking at the major swings here in the market. We then broke here to the downside. We did have a small pullback continuation there. That's a sharp, quick pullback continuation. Again, it's going to be more of a full swing to downside there for me. And we were looking at this as our swing low, which then gets broken once again. So we wouldn't use this as a level. So understanding the line chart, okay, for break of structure. You can see by marking this out, we have break to upside, pullback, break to upside, a reversal to downside, pullback, break to downside. Potentially, we can see a break now this high. So just remove that again. So now what we can potentially draw is from this swing high. Remember, these are closed prices. We've just broken to the upside. So we've seen the market shift from a bullish to a bearish, now potentially back to a bullish. So again, we would go to a price chart, we indicate what's going on. Here we do have a small area of supply, perhaps an area of imbalance. Let's go to price. So we have a small area of supply. So we have an area of a drop-based drop zone of supply where prices come into, and that's why we're seeing that reaction to the downside. Now, because we broke this move to the upside, we also then create this last sell to buy move here where price may want to reverse back to the upside from, and we can actually refine that to the last bearish candle. You see prices pulled in. We are now currently holding this area of demand. We could see a push up to remove this high. Now, if we went back to the line chart, what that would look like is then another break of structure here. So we'd be looking for the market to now push up from here to break this structure, pull back again, and continue to move higher until we broke this high here. That's how we'd be looking at the structures. And that's really how we'd be looking at that line chart. Line chart is just a very quick visual way of looking at price. This is our last area of demand. This is our last area of a drop-based drop area supply. And we also have this area here somewhere, which is our last area of supply, which is an origin supply that broke this structure. The same here would be an area of supply around here somewhere, which should have then been removed by this push up. So we just go back to price. This is how we can start combining the structure with line chart and even supply and demand zones. So you've seen how we can trade with the line chart using the structure of the actual line chart itself. Now we're looking at the actual swing points. Now, if we just zoom out of this chart and we look at a bigger picture here, using the line chart, we can identify larger swings that we have a push up, pull back, push up, pull back, a final push up. We then broke structure here, we pull back, we then broke lower, then we had another push up to break structure. We then shifted back lower, we have a pullback, we have a small pullback there. We then failed to go lower and we shifted back bullish. We then run all the way down, okay, shifting all the way back down to here, potential swing pullback, and we could see another continuation lower. So looking at a larger swing picture, potentially we could see the market swinging to the downside. So you can see how quickly we can identify that by looking at the line chart when we're zooming out. Now with a price chart or a bar chart, you're not going to see that as quickly as this. Obviously, going down closer into price, we can see we're at an area of demand. But looking at a longer term view, what do we have? We have the break here to the downside. That means we're going to have somewhere here, okay, an area of supply where potentially the market may want to come back to. We did have an area of supply here that's got removed. I just zoom in quickly, understanding the line chart. Okay, we can identify where the market was making these smaller breaks to the upside, and here was a final break. Okay, there. Then these smaller swings we broke down here. That would have left an area here of supply. We then obviously broke this structure to the downside. That leaves another area of supply here. Now, if we just go to a price chart now, and you'll be able to see this. We have this actual area of supply. Okay, and an area here, a last buy to sell move. Again here, buy to sell move. And you can see this by just looking at that line chart. This move up, break. This move up, break to downside. Again here, we can even see this as a small area of supply. This move up to the downside. If we go back to price, there's the last bullish candle before the drop to downside. So you can even use that line chart when it comes to marking out zones, but we'll do more on that in future videos. This is really just to understand how you can use the line chart in your trading. So you can use it to mark out your structures. You can use it to mark out your areas of supply and demand. And we can even look at using it to mark out areas of imbalance. Now, what do I mean? Let's go to another time frame. Let's go to the 4-hour here. And again, let's go to current price. So looking at current price, where could we see and understand an area of imbalance? Well, we're looking for large moves. Here's a large expansion to the upside. That means we're potentially going to see inside here somewhere an area, okay, of imbalance. And then we had a push here, a break of structure to the downside, and a strong push down, which indicates we're most likely going to see an area of imbalance here somewhere. Let's just go to price quickly and you'll see. So there's a big area of imbalance. Now the blue candle indicates a bullish imbalance for me, and the red candle indicates a bearish imbalance. Now we just came to any time frame and we could easily see this with a line chart. See how you can use a line chart to trade. It shows you many different things. We could see the breaker structure. We could see the sweep. We could see the areas of supply and demand. We can see the areas of imbalance. Now we're going to look at how you can trade using line charts with price action. Now that means by looking at using candlestick patterns when you're using these line charts. Now we're just going to carry on from the previous video from the same time frame, the 4-hour time frame. And the way we're going to do this, we're going to use a combination, okay, of our structure that we can mark out using the line chart, where our areas of supply and demand are going to sit. And then we'll be looking for a candlestick pattern. We'll be looking for a pin engulfing, a engulfing candlestick, or a pin bar out of those areas of supply and demand. So what we're going to do, we're going to look at an area, okay, let's just start down here. So we're looking where we see the market shifting, where we can draw out a area here of structure break to the downside. And then we have another small break here to the downside. We then shift back bullish, and we can start to see the market starts to continue to push higher. Now we're showing you more of the internal structure here. Now, of course, if you want to learn more on internal structure and swing structure, all of that you can learn inside the market structure playlist within this channel. So go and watch that after you've watched this playlist. We continue up and we break structure here once again to the upside. Now, as we do this, what we can remember doing is we can look down here for areas of potential demand. Okay, so we can mark these out as demand zones where the market potentially may want to come back to. Now, if we do come back to these areas of demand, we can then start looking for price action signal entry. So let's just look here quickly back to price. As we see price moving away, so we can see a push up, move sideways, and push up. And remember, what did I say? We could also identify, we can identify imbalance zones. Now these imbalance zones are also going to show you normally momentum candles, like you can see here on the chart. Look at the momentum move up, okay? We then pull back, we have another strong bullish candle, we push away, we broke this structure, we've pulled back, and right there we have a pin engulfing. So basically we engulf the previous body of that candle. Now we either want to see a pin engulfing, totally engulfing the previous candle, or the body of the candle. The choice is up to you, but the pin engulfing itself is a lower wick with a engulfing of the previous candle or the previous candle's body. Now, when you're looking for potential target, you can look at the line chart. Again, we have a swing high here. You can look to target, and you then have your next swing high over here. You expect the market to want to run the swing high. So we can see that we move this across. There's your swing high. If we went back to that price, and it's all about using candlesticks, okay, price action trading. If we then used a entry off this candlestick, I'll stop. Okay, we look for the stop either below the candlestick or use the actual demand zone. I normally look to go below the candlestick. And you can look for a first profit target here of a 1-to-1, and then look to target this high here of just over 6-to-1. And that's how you use price action with line charts. There's a first example, okay, a simple example. And all we did, we started with that line chart. Now, if we carried on with this, and we just moved with this next movement, so if we just mark off the next break out here, that would give us a new area of demand we could draw. And again, we would do the same thing as the market continues to break up. We continue to look to draw out new areas of demand. And what we've got to do is then go back to the price chart. Again, what do we witness here? We witness, okay, a big momentum push up, pull back, push up, we pull back, and we create a pin bar. Now, this pin bar is not the best looking pin bar, because when we're looking at pin bars, we want to see it closing within the previous candle. That is one crucial criteria. If you're using candlesticks for entries, is a pin bar must always close within the previous candle's body. This didn't, it would not be a candlestick I'd trade. I don't have any other candlestick patterns here I could trade either to the upside. I would not have taken any trades here. Going back to the line chart, we then have this break of structure to the upside, which would create a new area of demand here. Now, that does mean we can see that we didn't have an entry here. We had a break structure to downside, back to price, and we just run straight through. What does that now give us? That gives us a new area of supply that I can draw. So now we can go back to price. Price comes back into the supply zone. This would be the low here we look for price to go back to based on our line chart. So price comes into this area of supply. Now on this time frame, we just have this big bearish candle to the downside showing the imbalance, and it's an engulfing candle. Okay, we engulf the previous high to low of this previous candle. So there's no entry. Perhaps on a small time frame, there may be an entry. It runs straight for this low. Now, if we go back to the line chart, you will see that understanding this was the area of supply, it was a good zone to look for a trade. Now, we never closed this low. So a potential sweep you could find here on this time frame. But we do see that big bullish response as the market goes higher. We then would look for price to run this level, removing this area of supply, and creates this area of demand. Now, an area of demand here, let's go back to price to see where our last area is. So just look to see which is the lower of the two. This one, this will be my area of demand. So once we broke out of price, we can look for an entry. Okay, so as we broke out here, we can look for a price action signal. What do we also have within this area of demand? A sweep to the downside. We learned that in the previous video. Let's see if we have a candlestick pattern. So unfortunately, we have here, this is our bullish candle, broke out. We then had the pullback, okay, the sweep of this low and a push away. Now, the only candlestick here I can see is going to be this candlestick here for a bullish move. And I look for the market here to run this high next. Now, we can see that actually that does happen. But as the line chart was showing us at the time, we can see we actually run to that high, go back to the line chart, we actually had the sweep, okay, after that. So if we then go back to price, we don't have a sweep on the actual price, but the line chart we did. That means I could actually look for a confluence here to take a buy on the inside bullish candle instead and run price to the upside. That is one more price action candlestick I would look to use, the inside candle. Now this is going with a continuation entry, and we can look to enter off the inside candle, stop below the low of this candle. First target would be this high, just under 2 to 1, and they'll be looking for the next target for the next high, which will be here. And you can see the market pushes all the way up, okay, to just under a 4 to 1 risk to reward. So that's how we're looking at using those candlesticks. A very, very simple technique when looking for those candles. Then we just wipe everything quickly off this chart. Let's now go to a 15-minute time frame. And let's go to the line chart, and we'll just find any piece of price. Okay, let's find a bit of price. We have a bit here. Let's look at the market here. So we can see that we had a break here to the upside. We then reverse structure here to downside. And then we continue to break here to downside. So this area here, we would have an area of supply. We can start looking for potential signals. Let's go to price. So we have this area of supply. Market drops out, pulls back. We don't really have a decent entry. This does engulf the previous candle. We didn't quite wick higher. I preferred to see a wick above this high for an entry there. Let's go back to the line chart. We follow the procedure. We have another breakout. We have another breakout here. And again, we could go back to price and we could mark these out as areas of supply. There's an area of supply, price held, area of supply. Price has not come back to that zone. So we continue to see the price rolling off to the downside. We have another area here. Now that gets reversed right here. So now we can see where the market is actually reversing structure based on a line chart. And then eventually we break out there. So you can see we actually went higher, pulled back. Did we break out that low? We did just break out here. Then we broke back to the upside. And this was a very complex area of price. Then we broke out here. Before we broke out there, we created this sweep right there. So now we just go back to the price here. You'll be able to see that we create this area of supply. Price came into, we had a higher low, and then we pushed out with this move here. That created this area here of, in fact, it's going to be from this low and this bearish candle. Price pushes up, okay. We had another breakout, a new area of supply, but we had this, demand, but we had this area already on the chart. Very complex area of price. We broke down lower. That's going to create this area of supply. We pushed back through. Okay, now all what's happening here, this sideways price action movement, it's not something we want to be trading in. We're just coming back into this area here of imbalance. So we just pushed back into imbalance, and then we created the two candle reversal with a bearish engulfing candle right there. Okay, or even that candle there is a bearish engulfing, but we have a long lower wick, which I do not like. But this would have been a potential area. Why was this a good trade? Can you remember what we just went through on the line chart? Now, perhaps write down, leave me a comment if you remember what just happened. I'm not going to go back over, but there was something here that I said that could be on the price chart for an entry. And it was an entry. And we got a nice first profit target, and then we could let the trade run. It's all about bringing everything together that you're going to understand going through all the material in this channel. Of course, if you want to learn just how to use supply and demand, then there is the profit per trade workshop. Currently, it's on sale with 50% off. Now, there's a link in the description of the video, and there's a link above now if you want to go and check that out. This is how we look at using price action with line charts. And you can see that this trade actually ran all the way down here. Now, where would we look for a target? We look back in price, and this would be a great target of this low. So we can mark this off. because I believe this low would already been run, so we wouldn't use that. So you would use that as your last final target. And look at that, we've got just over 7-to-1 risk to reward. And that's all understanding what happened right at this area of imbalance. If you don't remember and you haven't dropped that comment below, make sure you do. And if you can't remember what happened, go back, watch the video again at that area so you can understand what happened there. To use line charts with supply and demand is a concept that many traders do not understand. So we'll go through this today and I will show you how simple it can be done. Now I'm on the New Zealand US dollar on the 4-hour time frame, and you can see we've got the line chart on here. Now, as we've already been through in these videos, you'll understand the use of the breaker structure. Now we can also look at the line chart itself with a larger swing, okay, break of structure here to the upside. Then we have another break to downside, a pull back, okay, a small break here. We then have a break here to the upside again. And then eventually we have another break to the downside here. So to show you this quickly, what this is, we have a push up, pull back, a push up, a break to downside, okay, break up, and eventually a break to downside. So understanding this concept is that we're on larger swings. We also have the smaller swings with these small moves within those moves. So we can see all the way down here, we have areas where we have supply zones being created. And we're also going to have larger zones here of supply that we'll be able to mark off as well in the market. Now, obviously we didn't break out here, but we'll have a smaller zone that we can use where we have the reversal. That's understanding market structure, understanding the use of your internal and your swing structure. So if I just put price quickly back on the chart, you're going to find there's a last buy to sell move here. I can mark out. And I'll go back to line chart to show you this is the break of structure you would see leaving this area of supply. Now, when the market drops down here, we pull all the way back up into the area of supply where you can look for an entry. Now, how do we look for an entry? Well, simply we can look for the reversal. There is another reversal out of the supply. Going back to price, what does that reversal leave us? That will leave a new area of supply you can draw. Now, it's near enough the same size, but you can see we pull back in, and that would be in your entry, stop above the high, and your first target will be in the previous low, and then you look for the trade to run to next targets. So that's how we just look at using a supply and demand approach with the line chart. Okay, we're looking for those larger swings that we marked out, and again down here we would use this last buy to sell move that we mark out as our area of supply. Now prices never come back to the area, and internally we have a dropout pull back into it, so we can see, okay, understanding the line chart. Let me just zoom into this area. Just going drawing tool, we have the break here to downside, the pull back in here where you can capture an entry, and then we continue to break down. Okay, we break down, and you can see that the market continues to be bearish. Now, understanding this concept, this is where you're going to find was probably in these areas, okay, sweeps of liquidity. Let me just back some of this off. Now, liquidity is something that we're going to have to dive into more deeper, and you're also going to have that full playlist where you can go through liquidity as well inside the channel. But if we now just quickly go to price here, you're going to find lots of wicks here to the upside. We also have this area here of supply. So if we just go back quickly to the line chart, I'll show you where we had that breakout. Okay, so we had this break here to the downside, area of supply. We have a break here to downside. Now right here, there was that sweep we just saw. Now you're not going to see that, but to the left, we have an area of imbalance. Now we can identify imbalances just by looking at the line chart. And again, we will have to do another video going through using of imbalances. Now, if that's something you want to see, a video on using imbalances with the line chart, drop me a comment below and let me know that is the next video you want to be watching. Now, just quickly going to price, you can see this candle shows me the area of imbalance where this wick pushes into. There is our sweep, and then we create this area of supply. Now we can identify the market comes into supply. Okay, we have a sweep inside here, and then we run to the downside. Go back to line chart. Okay, that means we're looking for price to eventually take out this low. That does happen here, and then we run back up for that sweep. Now, understanding liquidity here in the market, we're inside the area of supply. Back here, potentially this breakout does create a new area of supply here, and price does run back up. Now, as soon as I see a close up here, I understand it's going to run the high and give me a sweep of this high right here. Then we have this nice rejection candle. That is an entry trigger that I will be taking, understanding the use of the candlesticks, and we run down for the lows. Now we're looking for this major swing to the downside. Again, it's very simple process. We look at the next level. There's your breakout. Just grab the right line. There's our next breakout. And again, you can see the continuation where price continues to break to the downside. And we do this until we break through this major swing. Now, once we've broken through this major swing, we expect a pullback. And again, you're going to learn all of that through that market structure playlist in the channel. Now, if we just go across, we'll see what actually happens here. We don't need this on here now. We can see that the market does break out, goes a bit lower, creates the pullback in here, and then we drop to the downside. Now, this is very complex, this bit of price action. Now, just looking at the line chart may confuse you, but if you look at the line chart in the biggest swings, you start to see more of a direction. So we can see with that push down here, a pull back, a break to downside, a break to the upside, and now break to downside, pull back continuation. Okay, that's your larger swings. Now, again, like I said, we have these smaller swings within, and we can see this area of supply was created, a reversal out for potential sell. Again, down here, we create this area of demand to the upside from this reversal, even though we broke out, and we went back into this area of supply. Put price back on the chart, we can see that we held, okay, this last area here of supply, and we pushed down towards this demand zone, again, which held price. Now, at this point, when we're up here is where we're looking for that sell to come back down to this area of demand created, or even run this low. Now we can identify we had a great opportunity to sell here all the way down. And again, just quickly show you the entry would have been here. Now you could either take in a significant entry off this zone or waited for a candlestick. If you waited for a candlestick, we have an engulfing candle here, stop loss, and you could have targeted this area of demand over 3 to 1, or you go for this level heads we run, which is also going to be a target of nearly 4 to 1. So just understanding the concept, okay, we're in a range bound market here, but we continue to be bearish after we broke structure. Now we have the major swing and the internal swings. I'll be looking to target this demand zone, understanding this. Now, when the market does break through again, that's where you see the reversal. Again, inside here, there's no reversal we can look for. Okay, this is the area that holds price. Okay, we never break lower. We don't get a reversal here to go long because we already sold here. We're expecting for continuation to go lower. So once the market does break out, that gives us a bullish bias. Remember, we then create an area here, potentially go back to price, where we'd have an area of demand. Now that would be the last bearish candle. We could draw here, or you could use the full body of this candle as a full zone, but that's going to be a rather large zone. So there is your area, okay, marked out. We broke this level here, continued up. And that's how we look at the areas of supply and demand using the line chart. Now we can see price again comes back in. Now when we do come here, what can we do? We can look for that reversal out. So price comes in, makes a last push lower. Now that is a sweep through into there. We then make this breakout, okay, here to the upside. Now we go to price, you'll find there is your push up, sweep of this low, engulfing candle. There is your entry as we break out higher. Stop at the low. Now you can target the area of supply because we already have this area of supply. We saw the reversal out of major swing high, and you can look for the market to run that high if you want to expect the continuation. Now, if you're looking for those next areas of supply and demand, you're more likely to get your trades in and out of the market. back to the line chart. There's that reversal back out. Now at this point, we do have a bullish bias, and you would be expecting this level here to get run. Now, again, if you're using a line chart, you can use it for your targets if you wish. And if we're using it for your targets, it gets hit. The same being if we're using this level down here. Let's mark this one off. If you're using this level as your target, when you took an entry off this area of supply, understanding going with that structure, we get hit the level. So using your closed prices for your targets will work fantastically well once you understand the concept. You can see here again that level gets hit before we reverse. Now, if we're looking for a sell here off this area of supply, where would be our target? Again, okay, understanding the line chart, we never broke out. That means this level here remains the potential target. Because we failed to break out, you can expect price to want to run this low. That'll be our first target, second target this low. If we go back to price, we can see both those levels are run quite quickly. Now we do have a sweep back up here. So we look back at the line chart, we can identify, and this very, very often happens, an area of divergence. We're making a lower high, but going back to the price chart, the wicks make a higher high. So that's a great area to look for when you're using liquidity sweeps in the market. If you see that area where we're making a lower low on this line chart, but a higher high on price, that's a good continuation signal. That's a tip that not many people are going to see in this video because they probably haven't watched this point. So if you have, just write down you understand the divergence technique by using the sweeps in the market. So again, look, once we see this break, now currently on price to downside here, that's going to leave an area of imbalance on this move down. I would suggest let's have a look at price. There's your area of imbalance. Again, we'll do a video next on that. We'll come back to retest that imbalance and this previous level, and the market continues down. So we go back to the line chart. You can see how simple this is. We see the next breakout. Again, we have an area of supply. This is an origin zone. This is a breakout zone. Go back to price, and we can mark this off. That is your origin zone. Again, you can mark off the last buy to sell move here, or just that last candlestick. And the other breakout zone would be this zone right here. Now price does come back just about to that level and tags it. And we just go back to the line chart. You can see we then break out once again. We continue to fall to the downside here. New area of supply, which we need to go back to price and mark out that last buy to sell move on that candlestick. Price comes back. Zoom in. Mark it on the right point. Okay, so the price comes back into that zone right now. We could potentially be going lower. And there is another way you can use line charts. You can go down to a lower time frame here on a 15-minute. Okay, and we can look for a line chart reversal. So looking at this swing structure, you can see that the market has been bullish here. We pushed up, okay, pulled back, pushed higher, and currently we're in this area. So if we break this structure here, pull back, that's a reversal, understanding the bigger swings. Now we go tighter in and look at price here. We can identify there's that main structure break to the upside. We've also had now this smaller break to the downside here. If we go back to price, you'll be able to see this is our last major buy to sell move. And this is then that last area that we can mark out right there. Now we can mark it off the high of that move, and you can see that prices actually come back in and had a big drop back out. So now going back to the line chart, our reversal is going to be this low here. So if the market is to hold here and we continue down, that's the likelihood area we expect price to go to. And again, this level. Remember, these levels, okay, these closed prices are going to work absolutely brilliantly for your targets. So you can see that we come off this level. Now we're holding, okay, at this area. But for major swing reversal, we've got to see this being broken first, then the pullback to an area of supply. Okay, that's how we look at this. where you're using multiple time frames. Okay, you're looking for the multiple time frames. Again, all this comes into the use of market structure, which you can do through that playlist within this channel. I know I keep saying about it, but it is a superb playlist to understand how to apply everything with market structure. So how do we use that line chart for swing trading? The idea of using the line chart is to quickly visually see those areas of the structure in the market. Let me just go through what I'm talking about when I talk about the swing structure. So a swing structure is going to look something like this. Okay, this is our swings in the market. Now within those swings, we're also going to find our internal structure, where we're going to see the market, okay, shift from bullish to bearish, here back to bullish, and then back to bearish. And within here, we're going to see all this internal structure. That is the swing structure. Now that's the swing in the market we're going to look to trade by using a line chart. So that's all good that we can see this here in the market, but how do we then apply that to a line chart? How do we use that information with a line chart? Well, let's have a look at the line chart. If you zoom out of the line chart, it's going to give you the bigger picture. So if we see here, we can see the market push down, breaks this swing low, we pull back, we push lower, we break this low. So we can see here we continue to be bearish. We pull back. Now I'm expecting here a potential sweep, perhaps on the wicks. We do make a lower high here with the closed prices. Now the market's now within this trading range. And what we expect is the market want to continue to run this week low. And at the moment, price sits here. So we've gone sideways for quite some time. So what do you expect to see within this move? There's going to be smaller swings, of course. We're going to see swings within this area. We can see here all these little smaller swings where the market breaks structure, breaks back up, pulls back, sweeps this high, continues down. Okay, you can see how the market continues to move. So we can still trade these moves within, just as long as you understand that you're trading the swing structure here and you're going with the larger moves in the market. So what we can do, we can go down to lower time frame here and we can find those entries. So how do we use the line chart now with these swings? So let's just take this area. What can we see from this move? Well, so first we can mark off this level and we're going to see most probably here a 4-hour sweep. So I'm going to mark off at the moment a daily sweep. We're also going to have over here somewhere an area of potential supply. Perhaps the market's coming into that supply. It's market that offers a daily zone. This supply I'm expecting to be removed. Then we can also see this move here to downside, which I would class as an area here of potential. Okay, let's mark this off as an area of potential imbalance. So if you're not sure about what imbalances are, how we use them in our trading, there is a full playlist again on this channel, which goes through about how we use imbalances, how you can trade with them, and there's a full strategy at the end as well for you. So go and watch that as well as the market structure playlist. Okay, then come back and tell me you've watched both of those playlists. That's awesome if you do. So you can see that this is where we class our breaker structure. Okay, so this is our swings in the market. Now, it's our swing, okay, structure. And that's where we're looking to trade, a swing trading strategy as such when we're using line chart. So this is our swings with the line chart. This is our internal structure. But if we was now to mark off this area, and we'll go down to 4-hour, and we'll zoom out on a 4-hour, and zoom in, we can now start to see on the 4-hour, we zoom in a bit more. Let's take this area. We can start to identify, let me get my drawing tool, these swings. Okay, on the 4-hour, market breaks, pulls back, full move down, break this structure, which is going to be here, pull back, break the structure again, maybe just broken it there, then we push back, and we can see we shift back to the upside. So you can see how we can read that internal structure. It's going to show us when the market gets to this low, make a reversal, make the pullback. And that information is really handy when you're looking for those reversals up here out of an area of supply or an area of imbalance. Look, we're even looking at price using the line chart. I can identify there's an area of imbalance there. Let me just take all these markings off. So there's going to be an area of imbalance here. How do I know this? Because look at the move down the line chart. It's quite a strong bearish drop. If we just go back to price and I will zoom in, we should see a red candle. And then we have a series of red candles there. So that is showing me the imbalance within those candles. And this is how you can start to understand where the market's making that momentum drop out, okay? Understanding this is where the market's going to want to come back to, okay? This area of imbalance here to fill and to sweep this swing high. Because at the end of the day, this high here is going to be where we have liquidity. Now, there's going to be a full place within the channel as well on liquidity. So now we just go across to this area. We'll mark this across. Remember, there was one on the daily we saw as well. And again, if we go across, we can see where it comes back higher. So the market here just tags it. And when we pull back up here, again, we go back to the line chart. We can read the line chart. We have the market breaking up. We then obviously have this sweep here in the market on the 4-hour time frame. And then we have another break here, probably to the downside, or even this low here. That's going to create areas, okay, of supply and areas of imbalance again. So go back to price. You can see we have an area of supply here that I can draw my last buy to sell move. And on the way down, we have all this imbalance here. We have imbalances here left over. Now, we're not always going to pull back to these areas. You can see this occasion we didn't. But we start to look at the structure, which is the swings. Remember, we're trading swings here with this type of method. We can look at the market. Let's say this is a push up. We broke here, pull back. Okay, let's say we're just looking at this as a full pullback. This is more of our internal swings here. Okay, we pull back, we break above here, break back down, we pull back to new area of supply, we break down, and you see the market continues to move. So that's one way of looking at it. And we can also zoom out and look at the bigger picture. So what's the bigger picture here? The bigger picture, we start to look at these bigger swings. So we can see from here, it's most probably a full swing down, perhaps a swing down. We break out mostly here, pull back, continuation. We broke out here, pull back. And look at that as a swing as well. This is too small, tight together. This is more of a swing. Okay, again here, there's our swing. So hopefully you can start to see that we have those larger swings within this swing. All that smaller structure is then going to be your 15-minute time frame swings. So look at that, okay, understanding your swings in the markets. How we look at swing trading with a line chart. We can identify those swings quickly by looking at this line chart. We don't need to look at the price to find those swings. And then that's how we just start to look at the imbalances, the supply and demand. Again, supply and demand. If you need to learn more on supply and demand, there is a full playlist, okay, within the channel as well. You'll find a full playlist going through the steps of how to draw supply and demand, how to find them, to trade them, and everything else you need to know. So we go back now to daily. Let's look at that area where we're looking at price. When we do come back up, we price back on here. Let's look at price and see if we were correct. Do we have a sweep? Yes, we swept above this high here. Okay, we also pulled back into this area of, let's mark this off, this area of imbalance, and into this daily area here of supply. So the market sweeps above this high. That would be here. We also sweep here within. We also go into the imbalance here on the daily, and we had an imbalance here on the 4-hour as well. We fill that imbalance on the 4-hour and we go into here supply and we create a reversal out. Now what we do, we go down to 4-hour here and we look for a reversal out to sell the market. But we also have here on the way down, we break this structure low, we create a new area of imbalance. Now we go back to line chart, you can see that shift where we break structure, we drop down, we pull back, and we break structure again, we pull back, and we continue down. So what do you expect to find within here? Potentially a small imbalance or an area of supply. So we just go back to price. There's no imbalance in this occasion. So we have a break of structure using, okay, the line chart. This was my break of structure to downside. Okay, that's what we're looking at. But before that, okay, we have this sweep here in the market. Now, this is something, if you are still watching right now, okay, or you put down in the comment, you understand how to trade the sweep using the line chart. But this is a sweep on, okay, price. So if we now go down to a 4-hour time frame where we see this sweep, let's go down to where we see this sweep. And was it on this first bit or this bit? Let me just double check so it's not showing up. Okay, so it's right here. So let's mark that off as a 4-hour sweep, and then we can find out when we go down. I'm going to teach you a concept, which is understanding the sweep with a line chart. It's something I may do a more in-depth video on, but if you are watching to this point, then you are perhaps one of those 1% people still watching and going to understand this sweep, then put in the comments 1%. Just so I know that you are someone who's watching these videos all the way through. Now, nobody's going to know what the 1% means, so just put that in the comments. So you see this sweep here in the market. What is it sweeping into? Into this area of imbalance. Now, if we go back to a line chart, we can identify our structure, okay? We had our structure shift. The market is pushed up, pull back. Our swing structure has shifted. We make our pullback, we create a sweep, and we break out, and we continue to go lower. Now, at this sweep, I want you to understand that the actual line chart is showing you a lower high, right? But the market is making a higher high. That's what we class as divergence. From the line chart, okay, when we see the sweep, we see a lower high formation. Back to price, we see a higher high formation. Okay, so that is where we see that divergence. And when we see a sweep like this inside an area of imbalance, and I just mark out this swing, and we're also coming back above the 50% into premium area for a sell, we know we've got a good chance to sell here. Now we go down to lower time frame, we find an entry, and we're looking to target the swing lows here. That is a daily mark low, but we're marking out here on the 4-hour. We were looking to mark targeting the swing low and then beyond. Okay, and we do the same thing again and again. Now we can look at this next move down from this high to low. Using the line chart, we come back to the 50% within that premium area once again. Now this occasion, what is it coming back into? This area of supply. What sits here? Okay, it's a 4-hour supply. It's break structure. That's the breakout point. Okay, we also have an area of supply up here, which is also going to be our supply zone, which is our origin zone. There are two different types of zones, and there's two different ways we can trade it. So at this point here, we do have a area of imbalance, okay, which has already been filled on this push up, so it's not a valid imbalance anymore. But what we do have, we have a run of this high. It's a liquidity. We run through, we close back down. We also reverse this area of imbalance. Now, once we reverse that imbalance right here, let's mark it off. Once we reverse that area of imbalance here, okay, we wick back up. That is a perfect area where you can understand the lower time frame, another sweep for entry to short for the lows. You want to just learn about how you can use supply and demand to help you to identify trades, okay, as well. With my support, okay, you can check out the profit per trade workshop. Okay, you can find the link below in the description of this video, or there'll be a link popping up now if you want to go and learn more on the profit per trade workshop. It's a great starting point. So that is when we'll start looking at those swings. Just so you understand, this is really great information to understand the divergence between price and the line chart when we see these sweeps, especially inside areas of supply and demand and imbalances. So remember, if you're not sure about market structure, you're not sure about breaker structure, you're not sure about the use of imbalances there, or even supply and demand, there are full playlists within the channel. So I do suggest, if you have enjoyed watching this video so far today, and it's something you want to learn more and there's other concepts, go away and watch the rest of those playlists after you've been through this video. Come back and let me know you've watched those playlists. It's great to know that you're enjoying this content. And don't forget to put 1% if you got to that point, understood this sweep. So that is where we understand this swing, okay, in the market using line chart. You can just quickly look at the line chart. You can identify these swings and you start to look for the pullbacks, okay, looking for those entries. Now, if we zoom out, we can also identify down here using the 4-hour, okay, looking at the swing structure. If we go from this push up, we have a small kind of like push here, break downside. So you have that internal structure here you can see on the 4-hour. That's going to be your 15 minutes swings. And now we can also look at the larger swings that we can see here again on the 4-hour time frame. Going to be a push down here Might have had a push up, reversal again here. A very small, I'd say this is a full pullback. That's your major swings that we can see here, okay, on the 4 hour time frame. So that's how you look at the larger swings using a line chart. So how do we use line chart for liquidity sweep trading? I'm going to show you a very unique way you can use it as we go through this Euro Great British Pound daily time frame. So on the line chart, okay, on the daily time frame, and what we're going to look for, let me just do a drawing. Let's say we have a swing move down with a pullback. Now within this area, we're going to have within there, let's remove that, we're going to have our internal structure where the market pulls back up as well. But if we say this is our swing high, the market pulls away, pulls back, okay, and it makes this lower high, and then we see a continuation down. So we can see the market makes that lower high, okay, with the line chart. If we see on price making a higher high with a sweep, with a wick to the upside, that is a very, very good indication the market will run for this low. So let's just adjust this 1 moment. Let's take this away. Let's try that again. Nope, it's not picking it up. Okay, we've got rid of it. So let's look at this on a price chart, just so you can see this a lot easier. What we're looking for is, let's say we have, okay, remember when we're looking for buys with our swing structure, we're going to be looking for those areas on the chart where you can see price making a higher low, okay, with the line chart, and the lower low, we're looking for the price. So let's look at this move here. This is lower, okay, so this would not be qualifying. Down here, okay, we have here, we can mark off a higher low, and again another higher low. So at any point of these areas, we saw price went lower, okay, and the market would have to take out these lows here and here. Go back to price, we don't. So none of this qualifies for a liquidity in the market where we can look to take a trade. So let's now look at where the market's reversing instead. Okay, so we can see that within here we have some swings. Let's just mark these off. We have a push up, okay, pull back, push up. We just about broke out there. Okay, we pull back and we continue down. So any trades here where we're looking to market a run to is this low here. If we just take this swing away, so you can see, do we identify lower high? We do have a very just slight slant head to downside, showing me a lower high of price. Now we do also have, okay, if we look here, one here, but that's not a swing we're looking for. This is our first breakout, pullback. Now we're looking for the market to run this low. If we now was to see price, and we need to see the market pushing up like this, okay, with a wick to the upside, with a sweep, this is a great trade with that swing, okay, with using swing trading with line charts to target this low. And that's going to be a weak swing low. So let's get back to this area now. Let's mark this off. Okay, so let's say we don't make a higher high here within this circle, then there's no trade. Simple as that. We go to price. What do? Let's go in closer. Can't quite see. So we do make a higher. Okay, let's mark it off. We have a high here to here. We've made a higher high. So we mark this up. We have a sweep in the market. So as soon as we see this, we can look for sell. Now, it wouldn't be on this smaller pin bar. By the time we see the line chart moving back down to show us that lower high, it's going to be on this candle. But that's a point where I would look to sell either from this candle, and you can either put the stop above the high, or you can use your line chart and put the stop just above the line chart high. Now you may find that one works better than the other, but you can see on this occasion we didn't get stopped out and it runs the low. Okay, and you can continue to hold price as far as you wish, continue to follow price to next swing. But this is understanding that's where you expect price to run next, is going to be this swing low. Now, it's not the best risk to reward in that trade, but if you go down to lower time frame here, you're likely to find a better setup. But that's the actual use of this strategy. Let's go back to the line chart and see if we can see any more on the way down. So we can identify the market breaks here, pulls back, makes a higher high, drops all the way down. Okay, so let me just swing that out. So the other way we could look at it is a reversal. So we can see here the market's making a higher low here. So what this could be is a sign of a reversal in the market. Let's say we see this push down with swings. Okay, this I'm more likely going to. It is a small pullback, but this is going to be more of a structure break. Okay, we did break bullish here. So this is a higher low to go for this high again. And you can see the structure does continue. So let's say at this point, again, this is the opposite way. Let's say at this point we've made a lower low with the wick to downside with a sweep. A reversal candle here like we saw. Okay, again, it's a candlestick pattern with the use of line charts. Now, there is a video already. I've gone through use of candlesticks. Okay, if you're not sure about using candlesticks, you'll find that towards the beginning of this playlist series. Go back and watch if you want to learn how to use candlesticks with the line chart. Let's have a look at price. And there we have it. We do have a sweep to the downside. So again, where would we expect price to run towards? We're going to go towards these highs. Now, whether you use the line chart, again, you can use this as your target area, or you can go for price. But if we now continue with the line chart at the moment, what do we have? A nice bullish engulfing candle. Well, it's a large upper wick, but again, you can use, okay, the line chart as your stop loss or your target. We've got nearly 5-to-1 risk to reward, okay, if we're looking for a buy there. And it's very, very simple to do once you understand this concept. If there's no divergence there, then there's no trade for you to take. It keeps you out of the mess in the market. And again, look, we had another higher low here formed, but we didn't create that lower low for that divergence. We didn't make that sweep there. This is showing you where the market was going to run that high. Now, if we continue to follow price, let's remove this swing here now. And the market comes back down. Where do we make our next one? There's another lower high there. So again, if we make at this point a higher low with a sweep and a candlestick reversal, there is an entry to sell. Now at this point, it's just going to be targeting this low. So it's not going to be a great risk to reward probably. Go to price, but we didn't make that sweep. I don't believe. No, we didn't. So there's no trade there. So again, it did fall off, but there was no trade to be taken. Now, if we look at this move down, we have made this higher low currently. Now, is it a potential area we can look for trade? Well, just going through the structure of the swing, okay, this kind of a swing pullback, smaller swing. So we could say we're looking for the run of this low to continue. This could create a reversal and go long to break this structure high. So this could be the start of a reversal here back to the upside. But the swings, okay, you can see they're getting smaller as we go down. If we've made a lower low again with price, with a sweep, we need to see price run lower here. Back to price. Did we make that sweep and that road? No, we didn't. So there's no trade to be taken. It's that simple. It really is that simple to use this type of strategy. With understanding the line chart, with that divergence, okay? Just remember you're looking for that market, okay? If you're looking for potential sell, you're just looking for the line chart to do this, okay? Just looking for the line chart to make that lower low here, but you're looking for price, okay, to make that higher high with price, with the sweep, okay? The wicks, as we'll talk about the wicks on the price chart, the closed prices here, okay, the candlesticks. The wicks are the manipulation phase. That is where you're going to find your entries. Now, if you're still watching this video, I want you to put you are one of the 1% still watching this video, because look, many people are going to fall off towards the middle of this video. They're going to get bored. They're going to go do something else. If you're still here watching, then I class you as a dedicated trader who wants to improve. Really do respect that the fact you're still here watching it. So just put a 1% in the comments below so I know who you are. So again, this is when we're looking for those sells. If you're looking for those buys, you would look for this pattern to happen. Look for the market drop down, makes a higher low. Okay, at this point, again, you'll be looking for the market to be higher. Okay, with the closed prices, the wick to downside with the sweep to look for those buys. Now you can either see this, okay, either at a swing pullback reversal, or you can look for this and actually a reversal in the market. So if we go to, let's say, a 4-hour, we're going to keep the price action nice and close. And look, we can identify straight away, and I'm going to look at more of the larger swings here, not all these smaller moves, because these are going to get you in confusion. We can identify here, we make this higher low. So zoom in a bit. If we was to make, okay, a lower low here with price, that would be a good area to look for a trade. And we could look to target around this high here. So let me just mark the high off. If we're looking at swing structure, let's say this is the structure we're looking at. You know, this is all rubbish. We failed to break it. We then made a higher low and we break out. This could be the start of the reversal back to the upside. Let's just put price on the chart. Okay, we didn't. Okay, so this one didn't work out. That is it. There's no trade to be taken. That's how quick you can identify this. Let me just take everything off. Let's just put the line chart back on. Let's zoom out and see if we can see anything else. Okay, so there looks like another great example. We've got this as a swing. There is a smaller one, okay, as well here, if that one doesn't pan out. So you can see we've got that swinging pattern again. Remember your swings in the market. So we have this pullback. We do have a shift in structure here. So a higher low means we can run up for this high. That's where I'd be looking for a potential target. So this would be a great target. So any entries down here, okay, or even this one, but this will be your main swing. This is more of an internal swing. If we was to see here, and this would be an awesome example of it's right, a push down on a wick, and we got a sweep here in the market on a 4-hour. Okay, obviously I don't know what's going to happen until we look, but this is how you would go through it yourself. Okay, you can see the shift in the structure, and again, if you're not sure about the structures and understanding the swing structure and those internal structures as well, you want to go through that full playlist in the channel, and it's going to teach you everything you need to know about structures ready. This is ready to go through about that unique way you can look at the divergence, okay, with the line chart and price and with your structures. So let's have a look now at price. Let's see if this is going to work. Let's have a look. We have got a sweep. That is awesome. I didn't know if we was going to get this or not. So you 1% is still watching. You're going to see how this works. We've got the lower low against the higher high. That is a nice sweep. If we look at it, we get a nice price action signal. We do. Look at that candlestick. Look at the candle we've got there. Bullish pin engulfing. Absolutely perfect. Now you can either look to take an entry off that candle, okay, and you can put your stop at the low of the candle, or again you can just use your stop at the low of the line chart. Majority of the time, once we see this divergence, the low of the line chart tends to hold. You can see again that it's holding at the low. We don't come back to it, and your target's going to be this swing high, and that's a just over 9-to-1 risk to reward on that trade. Now, if you've missed this, there is a second chance opportunity here, because understanding the use of supply and demand, you're going to have an area here of demand. Now, the demand zone is the last sell to buy move, which is here. So there's my last sell to buy move. Now we also have inside the demand, mark it out, an area here of imbalance. So the market, you can see, pushes down into the imbalance, okay, and then we push back out. So there is an opportunity. You can go down here to perhaps the lower time frame. Let's go to the line chart. You can see on a 30-minute. So the market comes back in, and you'll be looking for a similar type of thing again. You'll be looking for that, okay, like that, this area here. We've got like equal lows here, and let's just mark this up. Okay, let go of that. Thank you. Very, very small equal lows. So we had a sweep of the equal lows again. That would be valid for me. And there we go. We do have a sweep, and I would take an entry off that candle. Stop can be at the low, okay, of the wick, or below the low of the actual area. So this is a low, equal low, and we've swept that low. That's nearly as good as that divergence. And again, you can then target, okay, all the way up to that high that we had. So we just shrink that market back down. I think that high is all the way up over here somewhere. So we mark that off, and this would be your target. Understanding that? And this is how you can increase that. This is how you can increase that risk to reward. Okay, so if you're using this as an entry, now I prefer to go down to the 15-minute, but we couldn't do that. We can see the market come in, and we made this sweep, okay, there, and we've pushed away. Now you could look for a first target at this high. This would be a great first target around here, and then hold on for that 4-hour time frame swing high using this swing structure. That is how you can create a 33 risk to reward. So what are the different ways we can use a line chart trading strategy? Well, let's look at how we can use line charts with 3 different methods. We can use a line chart with supply and demand zones, we can use line charts with market structure, and we can use line charts when looking for those imbalance zones. So I'm on the EURUSD pair on a weekly time frame, and we're just going to look at the current area of price head to downside, how you can apply all these 3 techniques using with the line chart. Now, many people don't use the line chart and don't understand how simple this can be. So you can see this is the price action. If we now go to a line chart, we can then start looking at the line chart, applying these 3 techniques. Let's start with market structure. So in market structure, we can see we have a major swing head to downside where price has basically pushed up, okay, made a lower high coming out of a zone here of supply. And then we've broken through here, and then we've pulled back. We swept this high and we continue lower. Now, all of this you can see with a line chart. You don't even need to look at the candlesticks. A line chart will show you the closed prices. So this is a closed price, okay, of a previous swing low, and this is where prices close through that low. And that's the important part. We need to see the close through. Now, this is a major swing we can see in the market. Now, we also have within these areas smaller swings, which we can see with the line chart as we move up and down. And it's also going to show us here the smaller internal structure within those swings. So what I mean by this is when we have this push here, okay, we eventually break through, we then create this new low, and we pull back to sweep this high. And very often what we can see is a breakout, okay, pull back to 50% continuation. Now, what we've got here is what we call the sweep for manipulation. And what it's looking for is something above this high. Now, normally we can see above this high, potentially here. We could have above here. I'm not sure what the candlestick's done. If we've wicked through here, we've most probably got an area of imbalance. And that's the other thing we can look for with the line chart. We can find areas of imbalance. The way we understand where imbalance sits is by the move away from price. Okay, so that's another thing we can look at. Like I said, we've probably got here an area of supply that we can mark out. So we have those 3 things that we can start to look at and apply. So let's start with the market structure. So we have the market breaking up, we break back down. We drop, we pull back. You can see we break out again. Now, as the market drops down here, we most probably have an area of imbalance that we can pull back into. We also leave an area of supply here when we break out, and we most probably leave an area of supply around here somewhere. Now, we have to go to the price chart afterwards to actually check and make sure everything's in the right order. But as we can see, the market again, we break down here. We're going to leave around here an area of imbalance where we can see price was probably coming back into, where we also see a sweep at this high. And eventually the market does make this break here to downside, which fails, and we have a pullback. So on an internal structure, we can see that pullback, and then we break back down. So we do then break this low. So we must probably have an entry here. We then pull back, sharp pullback to sweep the high. And again, you can see the market breaks lower. So what this then leaves once again is a new area of supply here. Now you would have had a supply zone here, which got removed and failed. So this is where you could have a losing trade. There is no one strategy you're going to win every single time. Remember, you're never going to win all the time. Now, as we come down here, most probably we're going to find areas of imbalance on this move down. Okay, we have a pullback again, a new area of structure to be broken. Now we make some equal highs here, so most probably we could potentially have a sweep before we drop, perhaps deeper into this area of imbalance if we got drawn. And again, as the market drops down, we're going to leave a new area of supply. And then the market comes back, we pull back, and we've just broken to the downside once again, where we will leave an area of supply here, which we class the origin, and most probably we'll have an area here where we break through the downside. And then we'll have an area here of imbalance. So there are supply zones and imbalances in our breakup structure. That's how quickly and simple you can use a line chart for a line chart trading strategy when you apply the use of market structure, supply and demand zones, and imbalances. So once you've done this, you've gone through your chart quickly, marking up the zones where you believe there's going to be, we can then quickly go back to the price chart. And now what we do, we go through the price chart and we make sure everything's in the correct position. So what I mean by that, we mark off the previous high. Now this is our last buy to sell move. So here there's our last buy to sell move. And that's where price comes back into. So that's our area of supply. We have this area of our structure. We break out with this candlestick. Now what did I say here? I said potentially we could sweep above into the area of imbalance. Now look, there's your area of imbalance. To draw this imbalance out, we mark it from the low of this candle to the high of this bullish candle. Now on this occasion, price never came back to that imbalance. At some point, we may have to come back to fill this imbalance. So we then have this level, okay, where we did push above. Now you can use the wicks, okay, equal highs, but on the candlesticks, we push above this high and we break structure back to the downside. Now that leaves me an area here of supply, which becomes my last, okay, buy to sell move. The price does come back and just wicks it. Now, again, we continue with the area of imbalance. The imbalance again on the breakout. See how you can find these zones without even looking at a price chart. The line chart will show you everything. There's the imbalance. We just fine tune it. Okay, we push in. Even on this candlestick, we wick through the previous candlestick to manipulate through to test that area of supply. Okay, so the imbalance below the supply, and then we drop away. Again, this becomes your next breakout level, understanding the closed prices. Okay, the wick breakout will be down here. So we break out, we pull back. There is our new area of supply. Now we don't draw this supply, okay, until we use this candlestick, which breaks out. When we draw a supply zone, we want to see really the break of the previous swing low. But understanding line charts, if you're using just the level, okay, that's a breakout of the level, that is a breakout of the level, but this is still the full zone. It's the last buy to sell move. We then break out with this candlestick. Look what I've got drawn here already, an area of imbalance. I knew this imbalance would be there just by looking at the line chart. Where does price come to? Okay, we come to test the 50% level of this imbalance. Now we don't come into this area of supply, but it didn't need to. We swept this high, okay, got the orders we needed inside this imbalance, dropped down to take the low. Now let's look at this price action here. The market does indeed, okay, drops down, creates this swing low. We break structure here on that one candlestick, but we never break that swing low. So you can incorporate the swing lows and highs to help you to find those actual true breakouts. But if you're using just the line chart for a breakout, that is actually a valid breakout. But we really can't draw this area of supply until we remove this swing low, which doesn't happen until here. At that point, we've made that pullback. So again, here, look, this is your true sweep above that high, and then we drop out. Again, this is your break to downside. Now your area of supply that we can draw, this zone goes from the high to the low of this bullish candle. That's your area of supply. Where does price drop and pulls back down into on this candle? Into that supply. Now this area we've got drawn of imbalance. This time we don't have an imbalance because look, there's no zone left in between that candle. It shows that big bearish candle, but we don't have an area of imbalance. So the supply held this time. It used the supply for the entry. Again, we then, okay, using this level, we break out, continue lower. Our last buy to sell move is this candlestick here. So area of supply. Now we don't come back to that supply. In fact, what we do have, which we didn't draw, was an area here of okay, imbalance. That's right, where prices come into this imbalance, we held at the high of the imbalance. Now, when we're using imbalances, we're looking at the low, the 50%, and the high of that imbalance. We held at that high, okay? So that's how we can use line chart. We just quickly go back to the line chart. That's that move down. See the solid move down. That's how we use, again here, nice move down, but we didn't get one on this zone, a nice move down where the imbalance sits. That's how we use the line chart to find those imbalances. So again, you can see price pulls back to imbalance. We never had to come back to that supply this time, and we've dropped out. Now we've used this as our area of our last buy to sell move. So now we've broken out of that zone. Okay, this one wouldn't be such a great zone. I'll now just use this larger zone because this one's internally of this one, so I don't really need it to see. But we can also see the area of imbalance that's been left behind. See? There's our current area of imbalance. So when this candlestick here closes, okay, it creates this imbalance. At the moment, it hasn't closed, but when it does close, we'll have this imbalance. So that is how we can use a line chart trading strategy when we're looking to mark out our market structure. Okay, when we're looking to mark out our supply and demand zones, and when we're looking to mark out our imbalances. Yes, we do have to go over to the price chart just to validate everything and make sure everything's in the correct position. But using a line chart is much more visually easier to see these areas. We go back to that line chart. Look how quickly we can identify where the breakout points all are, where we have the strong pushes to the downside, where we see the imbalances. Okay, there's our strong pushes down. Now we didn't have one here, but we have a nice strong push down, imbalance, strong push down, potential imbalance. We know from these swing highs is where we're going to see our supply zones. And we know that these lows have been broken and highs here to the left. That's where we're going to see those breaks of structure. Now, whether you use the highs of the line chart where the closed prices are, or where you use the wicks. Now, I would personally look at using the wicks. They will work better for you for a potential breakout. But if you're using this type of line chart trading strategy, I suggest to back test it, then forward test it, see what types of results you get, and see where it helps you going forward in 2024 with your own trading. Now, if you'd like to follow along with my personal analysis on the USD every day, then why don't you check out the absolutely free Telegram channel, and you can sign up on the link coming up right now.